Our open trading platform links to 1,300 global credit institutions and provides $8 billion in daily tradable liquidity. Join us.
Welcome to Trader TV Fixed Income, your insight into the trading climate for professional bond investors. I'm Dan Barnes. In August's show, we're talking with Chris Perryman, Senior Fixed Income Trader at PineBridge Investments, about the opportunities that traders and portfolio managers found in choppy emerging markets recently, and with Angelo Proni, Head of New Markets at EuroMTS, about the data and technology support that emerging markets traders need. Monthly government bond data is supplied by MTS. Chris, welcome to Trader TV.
Thank you for having me.
How would you characterise the trading climate for the last quarter?
It was challenging. Volatility ticked up quite dramatically, and for us, what we noticed is the banks in EM space particularly withdrew liquidity fairly quickly. So bids actually disappeared, and that's a theme I think that's been prevalent for a period of time. But in volatility, you see it more. I mean, it's not hugely different to EM experience in general.
Yeah.
But what we have seen is completely bidless markets in certain illiquid bonds. So,
yep.
Which for us provides a challenge, but also can provide opportunities. But yeah, we have struggled a little bit in that sense. The other opportunity that we've noticed around that is all-to-all platforms and other sources of liquidity opening up to people. So for us, yeah, volatility has certainly spiked. Mm-hmm. You've seen extreme moves on headlines, so 10, 20-point moves, whereas historically that may have been a smoother process with the banks wanting to take risk and having capital to put towards that. So yeah, it's been a challenge.
That's interesting, thanks very much. And so from the trading desk perspective, what does that look like in terms of bids, in terms of spreads, liquidity data?
So for us, the liquidity side of things, the information available externally is quite sparse. So we've had to provide our own internal measures of liquidity. And what we're doing within the EM space, what you're finding is the banks no longer are a broad brush of offerings. So you have to find the niche. There's a much more bigger fragmentation of the market. So you have to understand where liquidity is provided and who is the best within certain areas, certain niches. It can be down to country and sector specific. So for us, the skill set is, create databases, create heat maps of who's actually involved, who's actually trading those. And that's definitely the change for us, is the amount of data that we're handling has grown exponentially in the last kind of 3 years. And last year, you didn't see the volatility. It was a very one-way market. This year, with the volatility, what we've benefited from is having that setup where we understand and have that heat map of who actually trades it. Because what you get is occasional participants, yep. And when the volatility comes, they just disappear.
That's really interesting. And does that mean that you have to sort of bring new brokers onto your broker list? Does it mean that you have to engage with different sets of participants, or are these relationships you already have established?
So for us, I'd say in the liquid space, which EM comes into, we have expanded our list. I think in a post-MiFID II environment, what people were anticipating was the broker list to become shorter and people to try and scale up their trades. Yes. And I think actually that didn't happen. So for us, we anticipated that. In the liquid markets, what we're looking at is not just traditional relationships with banks, because I think the big benefit for us from MiFID II was that research is now completely separate. So there's no stick to sort of hand or carrot to sort of offer us in terms of, you have to trade with us to get X amount of research. That's just gone. So now what we can look at is brokers. We can also look at all-to-all platforms. And I think the electronic platforms have probably moved on to a level where they're interesting and volumes through them are actually getting interesting now. So for us, that's another liquidity source that we need to be tapped into and look at.
So we've got the scenario of what's been happening in the markets. What sort of risks and opportunities have there been then for sharp traders?
So for us, the way we've set up our desk, we have a combination of quant and qualitative skills. And I think that's the set and the mindset you need to go into this market with to fully take advantage of it. So firstly, you need to collect all that data and information available to look for opportunities. The challenge, the risk is if you become too reliant on electronic trading systems, if you become too reliant on RFQ, so request for quote. Yeah. So what can happen is what was a liquid bond becomes illiquid, and you trade it in a very bad style for that market. So you can give up lots of information, and you receive a bad pricing point, because basically the information is out there. And so historically that market might have traded 10 by 10, but actually there's been a headline, and no, you shouldn't trade that electronically at all. And you should be working more quietly or using different tools. So for us, it's a balance of using the electronic tools that are available, but also having that qualitative skill still of an ultimate trader who feels and understands the market based on information that they've gathered. And so you have a decision tree to make. Yep. Is it liquid? Is it illiquid? What does that imply in terms of systems, people that you engage?
Okay. And so you mentioned trading 10 by 10, so that's the size of the offers, the bids and offers.
Yeah, so you can have, so for us, the perception of liquidity is measured really by frequency of quote, size of quote, and the skew, if you like. So is there everyone bidding it or everyone offering it, or is it a two-way market, what we call two-way market, so bids and offers are there. But what we have to be able to have a skill of doing is to price risk. Yes. So where do we want to take the risk at? And that's a skill that buy side's building up. I think for us, I'm a bit older, got a bit of grey hair, so my new guys have learnt from me that side of the skills. Mm-hmm. So relative value, measuring where this bond should trade, and in a market environment where everyone's pulled their prices, and you go onto the all-to-all platform and you are going to be the price. How confident are you in that level? Are you correct? And the advantage that you can take with that is, if you've set the right price, you can get mid-market or even better if you're the only person out there wanting to take risk in that bond. What
ultimately is the outcome for the end investor if these things are brought together effectively?
So one of our stated goals as a trader at my firm, in my comp, is to contribute to returns. Mm-hmm. So, the focus for all of us, and we very much feel part of that team, be it an analyst, a trader or a PM, we're all the same. We need to contribute to the ultimate goal of giving returns, the best returns possible to the investor. And I think with this information, with this new data, what you can create is advantages that enable you to generate better returns.
That's great. Chris, thank you very much.
Thank you for having me.
Next, we'll speak with Angelo Proni, Head of New Markets at EuroMTS, about the data and technology support that traders need when engaging with emerging markets. Angelo, welcome to Trader TV.
Thank you for having me.
So, when we look at the data requirements for firms trading into emerging markets rather than, say, investment grade in developed markets, what sort of data and technology support do they need that's different?
Well, I think they probably need the same kind of data and trading support that they would get from more developed markets. The trouble is that in emerging markets, that product is simply less available, and both in terms of quantity and quality.
Right.
Just to summarise what MTS does, we organise electronic market for fixed income instruments. And we are designated by nearly 20 different governments around Europe and the rest of the world as a designated electronic platform for the primary dealership programs, which means that the primary dealers commit to making a market on our order books consistently, and are measured by the DMOs on how they perform that way. Now, the consequence of that is that activity produces data, whether real-time or historical, about price discovery, which is the tools that investment managers need to make informed decisions, whether on a day-to-day basis as the market unfolds during the trading day, or indeed also for analysis. And in that respect, then they need access to historical series, which they tend to use to feed into their algorithms, or in fact produce algorithms based on what they see on the historical data.
Okay, thanks very much. And so, if firms are trying to look for liquidity based purely on a bilateral relationship that they have, what sort of challenges can that create in terms of access to data?
Well, clearly they have, they don't get a second or a third or an nth opinion on a price that they're given from a dealer or a broker. So obviously the overview that they have of the market and the price discovery in a specific market's instruments will be limited to to a less than optimal number of sources for those prices. Clearly, if instead you have a trading venue that can collect price making from dealers that compete with each other on the venue, and those prices, albeit in anonymous form, are made public via real-time data products, obviously that democratizes the process of price discovery for the buy side.
Yes, of course. And so what does that mean in terms of their access to liquidity when they're using electronic platforms?
If an investor uses an electronic trading platform, and typically they will be using electronic trading platforms that function more on a request for quote trading protocol, beyond the opportunity to ask more than one dealer at a time for a price simultaneously, they will also, at least for the markets that MTS covers as inter-dealer markets, which are the ones that I described earlier on, they will also see the real-time executable prices that are made in that market. And so they know where the, let's call it, wholesale market is and where that level, and it clearly gives them the kind of information that puts them in a fairer negotiating position when they receive a price back from their dealers. So even beyond their relationships with the dealers via an electronic trading platform, if they're dealing on the phone and they have the inter-dealer real-time price available, they've got a better chance of knowing that they won't be taken for a ride.
Absolutely. So the trading desks have better access to data, potentially better access to liquidity as well.
That's right.
What does that then mean for the end investors who are putting their money in the funds that these traders are acting on behalf of?
Well, the end investors will ultimately enjoy the benefits that their institutional investor will receive, i.e. having a more informed view of the market, because the sources of the data that they're using to make their decisions are more reliable, more varied, and of higher quality, particularly in the inter-dealer markets where the prices, by the way, are executable. And therefore they are prices made by the dealers with skin in the game vis-a-vis their peers, and therefore not, it's not the talk is cheap kind of price, it's the, put your money where your mouth is kind of price.
Genuine executable
these are executable
prices.
As I said, central limit order book, and therefore that they are bound by.
That's great. Angelo, thank you very much.
Pleasure, thank you very much.
I'd like to thank Chris Perryman of PineBridge Investments, Angelo Proni of EuroMTS for their insights into trading emerging markets this month, and of course MTS for providing our government bond data. Thank you for watching, and to catch our monthly reports on other markets or to subscribe to our newsletter, go to tradertv.net.